Hello, everyone. Thanks for joining us again for our next educational session here in 2021. You know, it's funny, we actually already had this session designed and built out, and then on Monday, the White House announced even additional steps to the PPP. So it was actually timely that we had this scheduled, and we're going to include some of that here. Before I go into everything that we're going to talk about today, I did want to go over some housekeeping rules as well. First one is audio. So we want to make sure that you guys can hear this recording, whether it's through your phone or your computer. We are going to send out a recording as well. That's one of the main questions that we always get. And this is a live session. So at the end, we're going to have a live Q&A. Please use the questions panel in GoToWebinar and we can address those accordingly. So for those of you that aren't familiar with Management One, thank you for joining. Our purpose is to provide financial security for our people, our clients, and our affiliates. And our focus is merchandise intelligence and education like this for independent retailers. And I want to turn it over to CEO and co-founder of Management One, Marc Weiss, to discuss our core values.
Yeah, we put together our core values. It really was critical to our company moving through and going forward through COVID, and allowed us to put together these webinars. I think we've had over 13 or 14,000 people register and attend, so we're grateful and thank you. I want to talk about adaptability a little bit before we get started. Our community, the independent retail community, has done a stellar and astonishing job adapting to the new world of retail that we find ourselves in. And I wanted to just salute all of you for all that you've done, for keeping, for being, to partnering with us, to sharing with us, and as you can see on here, on collaborating with us. This is going to continue. We're not past COVID. There's still a certain amount of uncertainty, but things are definitely looking up. There's a lot of resources available to you to allow you to take risks, and I'm going to talk about. There's a lot of great information we're going to share with you today on the financial side that Rich and Erin and Missy have put together. And Paul is going to really talk a lot about at the end, which I think is great, about how we are changing and how our behavior is important and the adaptability that we're going to have to engage in to continue to work through this. So again, we're here to support you as you have supported us. Thank you very much.
Okay. Okay. So I guess my slide is up. So that's
me. I want to introduce Rich Rose. I'm sorry. I guess I forgot that I took over that last part. So Rich, I've known Rich and I have worked together for over 20 years. I've never found another person who looks at the financial side of the business from a global view the way he does. He's been a wonderful resource to Management One and to many of our clients on their cash flow issues and dealing with them. And he's all over the PPP, provides PPP funding for some of our clients. So Rich, take it away.
Okay. So just a couple of quick things on the PPP Round 2. Some of the stuff you may know, some of the stuff you might not know, some of the stuff you might have questions on. But essentially, the big thing is you can use your 2019 payroll numbers or the 2020 payroll numbers to qualify. Generally, people are using the 2019 because in most cases, 2019 is higher. So literally, you should wind up getting pretty much whatever you got at the first round of funding. The big thing as far as qualifying, you must show at least one quarter in 2020 with gross revenues dropped at least 25% from 2019, and you must compare the same quarters. So you can look at your second quarter, your third quarter, your fourth quarter, but you can't look at the second quarter in 2020 and the third quarter in 2019. That doesn't work. So you got to compare the second quarter, third quarter, or fourth quarter of 2019 to 2020. And if your revenue dropped 25%, that's one of the big qualifying factors. Now, one thing a lot of people forgot on the first round, and I actually picked up an extra 20 grand for one of my clients. They forgot that if they have self-employment income, they need to include both their self-employment income and the W-2 income of employees to create your payroll base. So in this particular case, the client had one employee, and in the first round, all she funded for was the one employee. She didn't realize she could also fund for the self-employment income she had. So that was able to get her an extra $20,000 this round. And I think there's a provision that she can go back to the first funding and get additional funding to cover for that. Basically, you take your payroll base for, you take your payroll base that you have and your annual payroll, divide by 12 and multiply by 2.5. That's essentially what you funded for. If you have self-employment income, you take your bottom line self-employment income, divide by 12, multiply by 2.5, and that gives you the amount of money you can apply for. In round two, forgiveness for round one does not have to be filed before round two is applied for. So that's a big thing. People were confused about that, and in a lot of cases, it hurt people by being in the middle of applying for the forgiveness for round one, because the SBA had some crazy code in their thing that if they were in the middle of applying for it, it was kicking out their application. I think that thing was fixed right now. So, but the big thing is you don't have to have that completed. You do have to attest that the PPP-1 funds were used for the right things in order to get the round two funding. Payment terms on round two, pretty much the same as round one. 5-year note, or except it's all forgiven if you spend the right expenses. And right now the deadline is set at March 31. My guess is they're probably going to be extending that. So the funding has been a little slower in round two. A lot of people have had longer time in processing because the SBA put some additional checkpoints in there, and people have been frustrated, but it's moving along. We think most of the kinks have been worked out. Then all of a sudden, when everything seemed to be stable and ready and moving along, the president decided on Monday to come out with new rules for Wednesday. Here's generally the new rules that they came out with. Number one, for the 2-week period starting today, the SBA will only accept applications from firms with fewer than 20 employees. The big thing was they wanted to hit the other employees and the lower amount of employees, and people felt that those people were getting shafted on the funding, so they wanted to give a quiet period that just allowed those people. Increasing loan amounts for sole proprietors and individual contractors. This is an interesting one, and I don't know how this is going to play out, and nor does the government. Basically, for self-employed people, the way they did it was, you file a Schedule C, you look at line 31, your net profit, you took that number, divided by 12, multiplied by 2.5, and that's what you were eligible for. They made a big change on that. Instead of using that number, they decided to use your gross income. So before your expense deductions, I think that's line 7 on a Schedule C. So now, if you have, a lot of people deduct a lot of their expenses and come out with very little net income, and they were concerned that sole proprietors were getting very little money. So now by using this gross income number, they're going to be eligible for more money. The big question now is, what about all the people that have already filed and already got their PPP or already in the process of the PPP? Are they going to be limited to the lower amount, or are they going to be able to apply for the additional money. So in other words, you're being penalized if you were on time and had your act together and applied. The answer is the government doesn't know. My guess is what's going to happen is there's going to be enough of an uproar that people are going to make about that, and the government's going to figure out some way of getting that extra money into the pockets of the people that already filed. But unfortunately, because people make laws before they think about it, that's a concern right now. They also eliminated restrictions on, I guess, if you had student loan debt that was it was in default, you could be eliminated from the PPP program. They've taken away that limitation. Also, if you had a non-fraud felony, any felony, you were eliminated from getting PPP funding. Now, apparently, if it's a non-fraud felony, you can get your funding. And also, non-citizen owners that are in the country legally, there was a limitation on that. Now that they've limited that limitation. So, typical as the government on these PPP programs, they're changing rules in the middle of the game. We don't know how many more rules might or might not change. New things come out every day. So that's basically the PPP in a nutshell. When we do question and answer, if you have some particular questions and stuff like that, I'm more than happy to answer that. So, who's next? Missy, are you next?
No, Mark, would you like to talk about the simplified application?
Oh, he's on mute.
You're on mute, Mark.
You're on mute, Mark.
Yeah, on March 5th, the SBA will begin accepting new simplified and enhanced forgiveness application forms. The new forms will include these enhancements: expanded qualified forgiveness expense categories, simplified forgiveness process for loans up to $150,000, an applicable covered period option, which I'm not exactly sure what that means, but if anybody on the panel can speak to that, that would be great.
Oh, there is one thing I do want to mention on that, and that's in the forgiveness. Everyone's been trying to rush to get their forgiveness apps in. I would somewhat hold off on that and think about that. You still have time to do it, and there's still rules changing, and particularly when Missy talks about the employee tax credits, there's a big thing there that you may want to hold off on your forgiveness until you do that, because it can make a big difference in what you get. So I know Missy will talk about that a little bit later.
Also, if you've already, like I have, we've already submitted our forgiveness from the first draw, we were told not to resubmit with the simplified version. It's done, it's in. The government is way behind, they're overwhelmed. And they just said to be patient with it. So, so if you have submitted, and I know many of you have, this wouldn't be part of it for you. But I did see the new submission process form, and it is way simpler than what we filled out. So that's a good move. Thank you. Okay, Missy Waits is with a company called Alliant Group. My accountant referred me to the Alliant Group a couple of years ago. We do a lot of technology, and there's a refund available for people who invest in technology, which will apply to most of you, as a matter of fact, as I found out. Missy will go over that, but they handle really involved, complicated tax credits, and they've been wonderful company for us to work with. Matter of fact, their onboarding was so good, I went back to my team and said, we've got to do a better job onboarding our clients. So they're real experts in what they do. And Missy, please share with us about the employee retention credit, which I didn't know anything about, so you guys called me a couple of weeks ago.
Sure. So thank you so much, Mark, and thanks everyone for joining. So just to continue on with what Mark was saying, who Alliant Group is and who I am specifically. So just like he said, we are a specialty tax firm that works hand in hand with your CPA to help you with very niche areas of the tax code. You know, CPAs and accountants are fantastic at tax and audit work, and you know, it's really difficult for them to know about every single area of the tax code or every credit and deduction that's out there. So they call upon companies like us to be able to help them with these specialized incentives for their clients. And Marc has been you know, one of our valued clients in that process as well. So to touch on the employee retention credit, you know, this is it actually came out with the CARES Act last year with all of the COVID relief benefits that have been rolled out. And like anything else, you know, Congress, the intent of this credit, they wanted to reward companies for keeping employees on over the course of the pandemic. However, just like any other area of the tax code, the first pass at this did have a lot of stringent guidelines to take advantage of it. And as we found, we were trying to qualify a lot of these incentives or this credit for our clients. You know, we have, you know, someone that's actually on a former counsel to the Senate Finance Committee that actually went back to his people there and said, listen, this is a very difficult and complex credit. There are some changes that need to be made here. And we've been lobbying for that ever since. And over the holidays with the COVID relief, they actually listened and said, okay, look, we've got to expand this credit to include more businesses to take advantage. So what that looks like as it stands right now today is that in order to qualify for this, it needs to be a company that's under 500 employees. And what that means is full-time employees. And that doesn't have to be someone who's deemed full-time. It could be somebody who is, you know, working full-time hours and maybe is not, you know, a W-2 employee or someone who's on the full-time payroll. But if they're working the amount of hours to basically equate themselves to full-time, that's someone we could qualify for this as well. Another thing that they're looking at for potential qualifications here is, you know, they want to make sure that, you know, there is some impacts from COVID, whether your commerce has been affected in some way, or even if you had to, you know, have some of your employees work from home because they couldn't perform their normal job functions because of COVID. That's something that could potentially qualify you as a business as well. So our company, what we've been doing is doing complimentary assessments just to see if companies meet the baseline qualifications and help them calculate this. However, if you are taking advantage of PPP, whether it be last year or this year, that also needs to be taken into account in this calculation because they're looking at the same expenses for this credit. So if you're taking advantage of the PPP loan, if you are taking advantage of any other payroll tax credits and incentives, those would need to be factored in as well. The most exciting thing about this incentive is that it is refundable, which means if you, let's say you have $100,000 in payroll tax that you owe for the first quarter of this year, and we're able to help find you $150,000 in payroll tax credits, we could offset that entire $100,000, and then you'd have a $50,000 check due back to you in a refund, a cash refund. So Congress really sat down and figured out a way to help small and medium-sized businesses really be able to feel the excitement for this credit, because it can be some additional cash on hand once you're able to offset your payroll tax. So really exciting things that that companies can take advantage of this year.
Now, Missy, you had, you know, you took care for management one initially, our R&D credits, and even if we outsource, we still get credits because we do outsource a lot of our IT to other companies. But when you were speaking to another group of our clients, you mentioned even on their e-commerce development, there would be an opportunity for R&D refunds. Can you explain that a little bit?
Sure. So just to switch gears here, so the research and development tax credit, that's one of our main offerings here at Alliant Group, and a lot of companies have no idea what that credit is about either. And it's basically a credit that's meant to incentivize you for keeping technical employees on staff, and also increasing your technology and or helping, you know, other businesses become more technologically sound. That can also qualify as well. But e-commerce, that's something that, especially during COVID, has been a huge ramp up and able to engage with your customers. So if you're spending money on revamping your website to be able to take on customer relationship management, actual point of sale, you're increasing the amount of traffic you can drive to your website in order to be able to do e-commerce. That's something that we can potentially qualify you to get a research and development tax credit in addition to an employee retention credit. That's probably the biggest thing for you, Mark, as well, is that you don't have to just take one of these incentives, you could take multiple. It's just a matter of how much and doing it properly.
Right. I want to also say, and I just want to repeat something that Missy said, they do an assessment for free. So if there's no savings, there's no cost to you. So it's kind of a no-brainer. And then there is a fee, obviously, for what they put, the time they put in. It's certainly something you can talk to your accountant about. In our case, we use a pretty decent sized accounting firm out of Chicago, and they said they can't touch the work that Alliant Group does for their clients. So some things are more worth being outsourced than others, and why we invited Missy to be with us today. Plus, we've got, I think we're in our 3rd or 4th year with you, so I can only speak highly about I'm hesitant to often give testimonials in public, but they have done just an amazing job for us, so thank you.
Awesome. Well, thank you, Mark. And if I know that we went through this pretty quickly in terms of the just what the employee retention credit is. I also touched on, R&D just for a moment, but if anyone has any questions, I'm happy to take more specific questions offline because it can get rather complex, and I want to make sure you have all the information and of course, assess if you qualify. So I can get my information over to everybody after this just to make sure that we can assess this for you and see if you qualify.
Thank you. Okay. PPP. So I wrote a blog about this, and I just want to, the PPP money that you get, it covers your payroll expense, so or other expenses as well. This is a great opportunity for you to take that extra cash and take some risks and invest in your future, and think about the things that you can get a return on investment for. It frees up capital to invest in connecting and delivering marketing to your customers. It gives you an opportunity to invest in your people. One of our clients during COVID revamped their compensation structure so that his people weren't hurting as badly. And it ended up carrying it forward because it was so successful. It gives you an opportunity to hire new people. I know, last year we brought on an integrator, and we brought on a business development manager, and we brought Erin on as our financial manager. So you have an opportunity to now invest in things that you can get a real return on investment. Invest obviously in new products and new categories. And for management one clients, we'll work with you on rebudgeting based on places that you want to take risks and roll the dice and say, we want to build out this category and take advantage of the new casual wear or wherever you want to go, or skincare, because people are in front of their Zoom. So skin is trending highly right now. So, and there's others. Next slide, please. Invest in cleaning up and negotiating debt, and invest in, your merchandising planning. We'll put a plug in for us too. So if you're not with us, join us so we can help you optimize your inventory and manage the risks that you're taking in data. So the PPP loan is also a way to take available capital that you create in your own business and use it to really re-energize your business. So, and continue to adapt. Thank you. So I'm going to introduce Erin. Erin is our financial manager, and we came up with, Erin developed a PPP template for us. I basically, Mike said to Erin, we need to understand how we're going to use our funds. We want to make sure we're following all the guidelines and laws. I asked Erin to give me a what if, how we're going to use the funds, when are we going to run out of it, and how will this impact our cash flow as a company. We've made this template available as a download to the entire retail community, whether you're a management one client or not. And Erin, I'm going to turn it over to you to share. She just did a marvelous job with this. And if I'm not wrong, we can actually use this for our forgiveness, right?
Yeah, we can. So this is just a worksheet to put in your own information, your own what ifs, taking your expenses, and I set it up so that it would help us with our forgiveness application. So based on what the rules were, I came up with this template, and
So I went ahead and dropped a link to that in the chat as well. And Erin, I'm going to go ahead and make you the presenter here, just so you can run folks through what this actually looks like.
But yeah, I created this so that based on the rules, and let me, there we go.
There you go.
Perfect.
You see it?
Yep. Thank you.
You're good to go.
Okay. So it's, when you get your loan, you want to be able to first fill out your loan details. So you can put in your start date. Say it was Monday's date, which was the 22nd. You can just put that in here. And it says it's protected, sorry. And it will automatically populate the whole 24 weeks. So it's all smart linked. So even these dates populate. You want to put in your original loan amount in the in here. Say it was 200,000, and then that automatically allocates it all through the 24 weeks. It even splits out the 60%. At least 60% needs to be used for payroll. You can go over that amount and use all of it to payroll if you wanted to. It's, again, up to you. And then if you scroll down, 40% goes to other costs, and see, it automatically tells you how much of that is allocated. And then you can also put in what you used for your other dates. So how Rich told you when you applied for your loan, if you wanted to use the dates from 2019, you would put those dates in here. If you used your 2020 dates, then you would put those there. Again, that's what you'd put in there. Again, and then you'd put in the amounts in here of your salaries that you used. So say so like for, so Nick Fury, say you said that he earns his salary.
I love, by the way, that you guys injected some humor in this. It's fantastic.
My Avengers, right? So you're going to say that he's, well, like.
Put in $60,000.
What?
Put in $60,000.
So you put in that his gross pay was 60. Well, he's an owner, so we'll say 250 is his salary. And then hers is 150. And then, you go down the list, and that way that's your earmarker, so that you know that if their salary fluctuates, you know what their baseline was. You're going to also put in your original FTEs. So say these are all full-time employees. You're going to put those in, but Miles Morales is only part-time, and it will automatically calculate there. So say she moves down to part-time, it will automatically calculate there.
So there are instructions with this spreadsheet, right?
Yes,
Okay, so we don't have to take up, we just wanted to share it and show it without going
Yeah.
through the whole.
and each section is labeled. Like there's even the part for the independent contractor, and this is also where you do the self-employed that Rich mentioned.
Right. Okay, so I think we can move on from here. I mean, there's a lot of detail that Erin put into this. If you have questions, you can reach out to us. We'll walk you through it. We'll help you with it. There's a tutorial that goes with it. We just wanted to show you that it's a very extensive spreadsheet that's flexible for just about any small business. Okay.
Where do we get the link, Nico? Nico, where do we get the link for that?
Actually, I put it in the chat function, and as Mark mentioned, yeah, we did include, Erin put together some great instructions that are also included on that link as well on our website.
Right.
And thank you, Erin, for running through that.
Yep. No
I'm going to
problem.
switch it back to my screen here. 1 sec. And I'm also going to invite on Mr. Paul Erickson. It's hard not to do a Management One webinar without Mr. Paul Erickson.
Well, it's literally because I insist to be included, Nico. But hello, everybody. I'm going to bring it on home. I'm actually going to take. I've got a note here that says take a slightly different tack from what you all have been hearing. It's actually quite a different tack from what we've been talking about today. And I'm talking a little bit about, you know, we know that the pretty much all sectors of the economy have been hit pretty hard by the pandemic, but I think for small businesses, for independent retailers, the negative effects are not just economic. You know, we've been facing this for a year now. And you think about it, it was about a year ago that when this all started. And what a lot of independent retailers are facing is actually a lot of mental stress from going through this. I mean, to be blunt about it, many retailers, I think, have been traumatized and they don't even know it. You know, post-traumatic stress disorder, which is commonly known as PTSD, we know that neurochemical responses outlive the original threat. We know this from soldiers coming back from Iraq, let's say. And those responses inhibit our system's ability to really return to normal life. And for this reason, you know, people who have experienced trauma may display symptoms that include, well afterwards, poor concentration, poor attention, poor decision-making, poor judgment. And we've all experienced such a sense of uncertainty over the last year that I think as we come out of this, it's almost hard for us to plan. It's hard for us to anticipate what comes next in our business. There's actually a study done in Canada, a mental health study, found that 62% of business owners in Canada felt depressed at least once a week. This was a recent study. And 54% said the stress impacted their level of concentration at work. And quite frankly, if it was that high in Canada, I expect the rate to be even higher in the United States. Nico, if you want to go to the next slide. So paying attention to our mental health, I think, right now, as we're almost out of this, is just as vital as finding the next customer. The reality is that a lot of people that are listening to us today are small business owners. And a lot of small business owners can't even take a day off at times. Some of them are working 2-3 weeks in a row without a day off. And we keep going until busy becomes, I think, mental exhaustion. Anxious becomes anxiety. Low mood turns into depression. And therapists advise that you can do many things to stay mentally healthy, like create work-life boundaries. I think is important. Exercise, obviously something I could do a little bit more of. Spending time with family and friends, finding ways to stay productive. But what they also say is ground yourself in the present. And I think that's important because one thing we know is that the past we cannot change, but the future is the only thing we can control. And Nico, if you want to go to the next slide. So some of the things that, here's what we know. the pandemic is coming to a close. I was very, very excited today. I actually booked tomorrow morning my first Moderna shot. It is coming to a close. Now, in recent weeks, economists have really begun to talk about a supercharged rebound. That's going to bring down unemployment quickly, drive up wages, foster, they believe, years of strong growth. In fact, I think I saw one of the Wall Street firms were projecting growth this year at 6.5%, which is unbelievable. Now, this optimism actually comes from a lot of factors happening all at once right now. We know the coronavirus cases are falling dramatically right now. The vaccine rollout, while we had a little bit of a weather issue over the last week or so, is still gaining steam. And I think we found out, today, the FDA is endorsing the Johnson & Johnson vaccine, which brings a third shot into the U.S. economy. People are going to be vaccinated very, very quickly at this point. As Rich has said, the federal government has injected really trillions of dollars into the economy through PPP loans, et cetera. The consumer today, for the last year, have not been able to spend money, are sitting on over a $1 trillion mountain of cash that was not there just a year ago. And finally, when things become back to normal, which they are happening very, very quickly, there are 30,000 less brick and mortar doors today than there were when we entered the pandemic. Nico, if you want to go to slide 4. Now, this is one of my favorite quotes. Actually, Marc Weiss showed me this quote, and I absolutely love it, from Brian Tracy. And the quote essentially says, the more you seek security, the less of it you have. But the more you seek opportunity, the more likely it is that you're going to achieve the security that you desire. So right now is the time to get our mind straight, to get growing is today, and having accurate and timely data is absolutely critically important, especially with an economic rebound that's right around the corner. It's one thing to follow your intuition and your gut, but to really have accurate data is essential. Because good data actually allows retailers to keep moving forward. Data allows you to measure. You'll be able to establish baselines, benchmarks, setting performance goals. Because right now, we need to maximize our potential as we enter this new post-pandemic environment. Now, I want to focus on two particularly important facts right now that we have learned over the last year at Management One from the pandemic. The first is that retailers discovered they don't need the amount of inventory that they had carried pre-pandemic. And second, the old adage, newness sells, has never been more important. Here's the rule of the road, I think, going forward when it comes to inventory control. Hold less, buy more, turn fast. Hold less, buy more, turn fast. For some people, that sounds like a contradiction in terms. Wait a minute, Paul, you want me to have less inventory, but you want me to buy more and you want me to sell it more quickly? Yes, that's exactly right. And let's look at how that happens from actually a client that I picked at random just to share with you a couple of examples of this. Now, what we have here is a merchandise plan for one of our clients, and it's novelty t-shirts. And Nico, maybe if you could put your cursor over to the points I'm trying to make here. The points I'm trying to make here is that this is a great example of hold less, buy more, turn fast. We started seeing that in this store in September. The September inventory in this client was $25,190. That was $18,000 less than where they were in 2019. In other words, they had $18,000 less product pre-pandemic than during the pandemic. Oh, their sales must have been terrible. Well, actually, their sales were up $32, but with 18,000 less. Hold less, buy more, turn fast. October, that was a one-off. Let's look at October. October, they still had about 25,000. They had 14,000 less than a year ago during the pandemic. Sales were $900 up. Now we go into November, their inventory is down 19,000. Sales were up in November during the pandemic, $2,300. And finally in December, inventory was still down, but sales were still up. Hold less, buy more, turn fast. Let's look January, last month. In January last month, our inventory is at 23,000. That inventory is $3,600 less than last year. Our sales were up 1592. Why? Because in every one of those months, if you drop down to ECO and show the receipts, they were receiving more, 10,000 in this case. Last month they received over $10,000 worth of product, and the year before we even knew a pandemic was on its way, they only received 4,500. And all that new product has done is push them now into February. Right now, this report was ran just 2 days ago, and right now they're at $8,500 in sales. I'm pretty sure they're going to beat last year since that was 86. They've got $100 to go. Hold less, buy more, turn fast. Let's just go to the opposite. It's the same store, but if you look at these numbers here, it's the exact opposite. In this case, in this jacket category, last month they were down in terms of sales $5,950. So their sales were down, but also not only was the inventory down, they didn't receive anything new. Just go down and show them only $1,200 came in. The year before, an avalanche of new products, new styles, new things hitting the sales floor. This year, nothing. This month in February, only $4,500 is received. Last year, $26,000. Inventories depleted. Right now, sales are at $9,300. They've got a week to go, and last year they did $20,000. It's not just about holding less. It's about buying more and turning fast. And if you think that I had to go and cherry pick these examples from our database, this was the first client I looked at. I didn't have to go more than one. And we see this in dozens and dozens and hundreds of our clients, where they are learning what they've learned from the pandemic is they did not need as much inventory as they had before. In fact, there's often been many studies that if you give people too many things to choose from, they can't choose. What they find is that we're faster turns, holding less at any given time, but bringing more in is really the secret sauce of how we go forward after the pandemic. Let's go to the last one. It's another quote. It's by Andy Grove. And Andy Grove was the former CEO of Intel. And essentially his quote is, bad companies are destroyed by crises. Good companies survive them. Great companies are improved by them. What have we learned? So my question is, before I turn it back to Nico, is what kind of company do you have?
Thank you, Paul. I'm going to turn it over here to Q&A. I was trying to get Missy back on. I think she had some connectivity issues, but if there are any specific questions for her, we can do that via email. This first question here is actually for Mr. Rich Rose. You talked about self-employment.
Okay.
And Anne is asking, when you mean, she's just looking for a little clarity. When you say self-employment, are you talking about 1099s, or are you talking about exactly what the owner pays themselves? And she had an example. She says she pays a self-employed marketing consultant. So are you saying that you can include that, or is it just in-house employees?
No, it's just the in-house employees. So when I say self-employed, generally if you're a sole proprietor, your income is considered self-employment income, and you file your return either using a Schedule C, or if you're an SCorp LLC, you might be using the 1065 K1. That's where your self-employment income would show up. So instead, because some people pay themselves that way instead of through W-2 wages.
Gotcha. Mark, you're on mute.
If you do contract out for R&D, like building a website or something like that, and potentially some marketing, I wish Missy was here to answer that. That would fall under the one of the.
Yes, that would be an employee retention tax credit.
Right.
Yes, two different programs, but yes, that's how you get reimbursed for that.
Right. And I know, and I think it's good timing, because many clients really got involved in building their digital footprint last year. So it's a real opportunity. It's real called out.
Yeah.
Absolutely. Claudia is asking, how many weeks do we have to use our PPP2 money once we receive it?
24 weeks.
And one of our partners, Candice Daniolo, she's asking, do you have to get round 1 in order to get round 2?
No,
And
what you do is, that's actually called round 1. If you have not gotten round 1 yet, and it's time for round 2, you get round 1. So it's just the different name.
Also, I wanted to mention, and I only got this from one source. I haven't heard it from a second source. You know, last year the SBA paid 6 months of your principal and interest on your SBA loans, the 501Cs and the 2As or 7As, 7As, right, Rich?
7As, yeah.
And I heard just on Friday chatter that the SBA was going to pay 3 months up to a maximum of $9,000. Now, I haven't been able to get that confirmed by another source, but I would, you know, keep your ears open, talk to your accounts, call the SBA, and keep track of their website. You can go to sba.gov, and they do a better job now updating it than they did before. But all the resources we're talking about are available there. And by the way, I think, and I read this on the SBA site today, that if you didn't get if you got an SBA loan as of September of 2020, you might be eligible for some of that recovery from the SBA. So I would definitely spend some time checking that out.
excellent. This one was from Missy's slide, but Rich, you may be able, I'm not up on all of the financial acronyms. At the bottom of her slide, there was an acronym that said WOTC. Do you know what that one is?
That's I think that's the tax credit for tech. I think that might be.
R&D is the tax credit for tech.
WOTC, no, I'm not sure then.
We'll have Missy answer that one for him via email. And I guess this one would be either Rich or Erin. When you were talking about full-time employees, does FTE matter if your loan is under 50,000?
I think if you're under 50,000, well, there are some things you don't have to report. I think for under 50,000, I think they took that away, that you had to do that, and you had to maintain a certain thing. I'm not 100% sure, but under 50,000, there's a good possibility of that. I can check that out.
Perfect. Did anything in this new announcement address EIDL, or was this PPP only?
PPP only.
That was coming from Marie Penner. And again, this would be a Missy question. This is an easy one though. How do we get in contact with Alliant Group for an assessment? So I can include Missy's contact information in our follow-up email when I send out the recording, absolutely.
And I did ask them if they only looked at businesses of minimum size, and she said they had no qualifiers. Because I know our audience is wide in range in terms of volume that you do.
Absolutely, yeah. And we will include Rich's as well. Holly was asking for Rich Rose's,
yeah,
as well. Easily done. And then this is coming from Michelle Varon. She says she's an SCorp and only taking a small salary. The majority of the income is there. So can she get more money from PPP, or is it just for sole proprietors?
She's an SCorp. I think she can get more money from PPP. She has self-employment income, or K1 coming out at her.
I think that's an excellent candidate for an offline conversation.
Yeah.
Most likely. I think a lot of these are going to be very use case specific. So
yeah, and please feel free to call, get a hold of me, and I can walk you through it.
Perfect. And then Holly was asking our last question here. Do you foresee any changes to EIDL?
Good question. I think they are so backed up on EIDL. They're focused on small economically disadvantaged businesses right now. They're not even looking for anybody to applying for anything. They're contacting you if you're eligible for more of the grant money that you might have missed out on in the first round. So I'd say I wouldn't count on it, but you never know.
But what if you didn't apply for an EIDL loan previously?
I'm sorry, what?
What if you didn't apply previously for an EIDL loan?
I think the deadline on that was December 31. So I don't think they want you to be doing it. They might have opened up the window on that, but you're going to be so far in the back of the line.
Melanie was actually asking, she says she received round 1 on April 30th, 2020. So should she be looking at forgiveness now?
Well, here's the $64,000 question. If she thinks she's going to apply for the employee retention tax credit, I personally would hold off on forgiveness because there's a way you have to look at the two of those together. If she doesn't think she's going to do that, if she thinks she's totally done with what she needs and everything else, then she could probably apply for it. She did get it early on, so she has to keep an eye out on the deadline there.
And again, there's a simplified form coming out on March 5th for that, but that might be a good question to ask Missy because they can walk through. So you know, part of why I use them is so I don't double dip on my credits because I get credits for tech, I get credits for, you know, different things. So that would be a good question to ask. And even if you're a small business, you shouldn't be afraid to ask those questions.
Mm-hmm.
Yeah. And let's see, Kwanzaa was asking, she says they received the EIDL loan because their accountant initially told them they didn't qualify for PPP. Now they want to apply for PPP this time around. And was there any discussion that both PPP and EIDL may be forgivable?
EIDL will not be forgivable. It's that's coming out of a different fund, and it's just don't count being forgivable. PPP will definitely be forgivable as long as you use the right expenses.
Well, the grants, the up to $10,000 grants,
Yeah,
you know, that's forgivable.
Yeah, the grant is, you know, that's what it is. It's a grant. So EIDL has a lot of confusion. There's a loan portion of it and a grant portion of it. And it originally was set up that everyone should get the $10,000 grant. They started running out of money. So instead they took the number of FTEs times $1,000, and that's what they're giving out. And now that's what they're contacting people for now, to try to get them the remainder of the grant money up to that $10,000.
Also, some states, because I know some of our clients have gotten it, some states have provided grant money that you don't have to pay back.
Yeah.
And you should definitely check your own states for those opportunities. Your state chamber of commerce or local chambers may be able to direct you there. And one thing about the EIDL loan, those are 30-year paybacks at extremely low interest rates, so they're not a big hit. You do have to start paying on them a year after you get them, and you can start paying on it as soon. The government was quick to that part about sending the invoice out. They didn't. That came right away. That part they got. So you know, in our case, I decided that we took out an EIDL loan and we started paying towards it as soon as we got the invoice because we're gonna have to pay it anyway, so or pay it back. So yeah, continue to seek and search for other opportunities for grants and aid. They're out there.
And I'm glad you mentioned that on states because Michelle actually had a question about do we know anything about California grant programs? So I would definitely search in your own state.
Yes, as a matter of fact, the one I was speaking, what made me think about it was a client of ours in California got a $25,000 grant from the state of California. That's free money basically. Got it, I think 2 weeks ago.
Excellent. Tracy was asking, so the EIDL grant up to $10,000 does not reduce your forgiveness on PPP 1? Question mark.
No, it doesn't. It used to. They changed the law on that.
But it was deducted from your EIDL loan if you got an EIDL loan.
Perfect. And then the last one here from Holly, she says there's been some discussion on group boards about traditional SBA loans being a better option than EIDL. And she's just asking if, Rich, if you agree or disagree with that, and is SBA still funding traditional loans?
Oh, yeah.
SBA is funding traditional loans. And as Mark mentioned, they're subsidizing some of those payments. EIDL is a little more restrictive in what you can use the for, but the interest rate is less and the term of the loan is a lot longer. So depending on what you're looking to use it for, it's not a simple yes or no question, but EIDL has definitely got favorable terms. There's just a couple little quirks in it that you got to be careful on.
Yeah, and if you're a Management One client currently and you're interested in banks that do a significant amount of SBA lending, please contact us. We can put you in, depending on the state you live in. There's banks that understand who we are and what we do. So they have very good organizations to help set you up if you're looking for it, or even if you're looking to buy a building. SBA loans can be available for real estate too. And the government paid on those loans as well last year. So if you owned a building and had an SBA loan, the SBA paid for it, principal and interest, for 6 months. I know those are the 501(c)s, right?
No, 501(c)(3) is nonprofit. What are those loans? 504.
Yeah, 504. Right.
Excellent. Well, Mark, I will leave it over to you for a closing argument.
I just want to thank Erin for putting the worksheets together, Paul for your presentation, Rich and Missy for your expertise, and Nico for hosting this as well as you always do. Again, we're working, what we know today could change tomorrow a little bit, so we try to stay on top of it. Nico's really good about keeping our resource center up and running. The retail playbook is still available online. There's still lots of great content in there for you to use. We've created a lot of templates from vendor performance to 12-week cash flow, which I highly recommend you use, along with the PPP template. We're here to help you, teach you, train you, work with you on those. And we want to again thank you for your support of us through COVID and onwards and upwards. Thank you all. Have a great week.
Thanks, everyone.
Thank you, Nico.